In the wild world of crypto, there's one question that never gets old. Where's the best place to actually buy, sell, and trade? Well, heading into 2026, the answer has gotten way more complicated. Let's figure it out together.
All right, before we get started, just a quick heads up. This is all for educational purposes. We're here to unpack the information, not to give you any financial advice. You've always got to do your own research.
So, let's get right to it. Where should you actually be buying your crypto in 2026? Because believe me, the landscape has shifted. The old answers might not be the right ones anymore, and making the wrong choice can be pretty costly.
You know, so many people getting started make the same mistakes. They totally overlook security, they chase the lowest possible fees without thinking, or they put their trust in some random, unproven platform. By the end of this, you'll know exactly how to dodge these traps and find the exchange that fits you best.
Here's our game plan for today. We're going to start with how these exchanges actually work. Then, we'll go through the new checklist for evaluating them in 2026. After that, we'll jump into comparing the top players, and finally, we'll help you figure out your perfect fit.
Okay, let's start at square one. You've got to know the basics, right? You wouldn't get behind the wheel of a car without knowing what the pedals do. Same idea here. Let's cover the fundamentals. So you've basically got two main flavors of exchanges. On one hand, you have centralized exchanges, or CEXs. Think of these like regular companies. They're user-friendly, fast, but they need to know who you are. On the other, you have decentralized exchanges, DEXs. They're peer-to-peer, you're in full control, but they can be a bit tricky to get the hang of. For today, we're really going to focus on the big, centralized players. And that brings us to a really important idea: custodial versus non-custodial. Most of the big exchanges are custodial, which means they hold on to your private keys for you. It's super convenient, kind of like a bank, but it's a huge trade-off. You are fundamentally trusting them with your assets, which is exactly why all this talk about security and regulation is more critical than ever before.
Okay, so how do we judge these platforms in this new environment? Let's break down our 2026 evaluation checklist, because what mattered a few years ago isn't the whole story anymore.
Our ranking factors have evolved. Honestly, security and regulatory compliance have shot right to the top of the list. We've got massive new rules like Europe's MiCA framework, which basically sets one legal standard for crypto across the whole EU. And then there's tax stuff like DAC 8 that makes reporting way more strict. And exchanges compliance isn't just a nice-to-have anymore, it's essential for keeping you protected. All right, with that new framework in mind, let's put the heavyweights of the industry head-to-head.
Now, a chart like this tells us something really important: liquidity. High trading volume is a sign of a healthy market. It means you can get in and out of a trade quickly without the price going haywire. And I mean, just look at those numbers. That's a staggering amount of money changing hands every single day.
So let's start with the elephant in the room: Binance. It's an absolute giant when it comes to trading volume and the sheer number of coins you can find. But that size comes with its own set of challenges.
Okay, so on the plus side, Binance has some of the lowest fees out there, a mind-boggling selection of assets, and that SAFU insurance fund for some peace of mind. It's a paradise for active traders. But here's the catch we kept seeing in user reviews: customer support. It's pretty much all chatbots, and when you have a real problem, that can mean long, frustrating delays.
And I mean, wow, this quote really says it all. A user from late 2024 saying they've been waiting 2 years for a fix? That's a huge red flag. It perfectly illustrates the risk you take when there's no real human to talk to when your money's on the line. All right, let's pivot to a completely different playbook. KuCoin saw which way the window's blowing and decided to get ahead of the new regulations in Europe.
And this is a really big deal. By getting that MiCA license, KuCoin can now operate legally across the entire European market from one single regulated hub. That is a massive strategic win for them. So for any user in Europe who puts compliance and playing by the rules at the top of their list, KuCoin suddenly looks very attractive.
Now let's hop over to the United States. Crypto.com has really leaned into a specific kind of security that people from traditional finance understand and trust: insurance. And check this number out: $5 million. Through a partnership with FDIC-insured banks, they can offer up to $5 million in insurance on your US dollar cash balances. Now, to be crystal clear, this is for your cash, not your crypto. But still, that level of protection for fiat on a crypto platform is incredibly rare.
Of course, the list doesn't stop there. Bybit, for example, is an absolute powerhouse for derivatives traders. If futures and options are your game, that's where you look. OKX is another titan, known for its deep liquidity on major trading pairs. Then there's Kraken, which is getting into a really cool space by expanding into everyday payments with their Crack card. And finally, you have Gemini, which has built its entire reputation on being the most secure, buttoned-up, and compliant exchange out there, making it a favorite for big institutions.
Okay, we've looked at the big players. We've seen what makes them tick. Now, let's turn all this information into a real action plan for you.
So here's a quick cheat sheet. If you're brand new to all this, Coinbase and Gemini are fantastic because they're just so easy to use. If your main goal is to pay the absolute lowest fees, then Binance and KuCoin are going to be your top contenders. For the pros who need advanced tools, Bybit and OKX are the way to go. And if regulation and safety would keep you up at night, then KuCoin in Europe and Crypto.com in the US have some really unique advantages.
All right, and whatever you decide, please avoid these common traps. Number 1, do not leave all of your funds sitting on an exchange long term. Remember the saying, not your keys, not your coins. It is the golden rule. 2, always pay attention to withdrawal fees. 3, in 2026, there is zero reason to be using an unregulated platform with no protection. And 4, this is the easiest one, enable two-factor authentication. Just do it.
And hey, if you need a chilling reminder of why this stuff matters, just look at the massive Bybit hack from early 2025. Over $1 billion gone. This is the ultimate, painful lesson in why you need to take control of your own keys and move your serious holdings into a personal wallet.
So, I'll leave you with this final thought to chew on. In this new world we're in, what does best even mean anymore? Is it the platform that saves you a few bucks on fees? Or is it the one that's fully compliant and gives you real peace of mind? The answer to that question is going to define your entire crypto journey.